Welcome back to the Deep Dive, your personalized guide to understanding complex topics.
Always a pleasure to be back.
Today, we're diving headfirst into global financial markets.
Yeah, should be interesting.
We've got a whole stack of fresh articles, Bloomberg, MarketWatch, Wall Street Journal, the whole shebang.
Lots to unpack.
And listen, even if you aren't a Wall Street whiz, this stuff matters.
Absolutely. Impacts all of us.
I mean, from grocery prices to, planning for retirement, it's all connected.
It really is.
So let's kick things off in Asia, all right?
Yeah.
CNBC is painting a bit of a mixed picture over there.
Okay, interesting.
The Hang Seng in Hong Kong, it's up almost 2%. And mainland China's CSI 300, it's surging, over 2.5% gain.
Wow, that's significant.
But then you've got Japan kind of going its own way.
Oh, how so?
Well, their Nikkei 225, it actually dipped by almost 2%, extending this 4-day losing streak they've got going.
I wonder what's driving that.
To figure that out, got to look at their bond market. Financial Times is reporting Japan's 40-year government bond yield just hit a record high.
Since when?
Since 2007, which is, a while. And high bond yields, those can make investors nervous.
Yeah, I can see why.
Often signals potential interest rate hikes on the horizon.
Makes sense.
And speaking of interest rates, CNBC is saying the Bank of Japan might actually raise rates as early as next week.
Really? With those record high bond yields already?
Yep, seems like they might hike them even further. There's all this speculation.
What's the thinking there?
Well, it's a balancing act, isn't it?
Always is.
Wage growth in Japan is picking up,
Yeah,
which
sure.
could, fuel inflation.
Right.
Plus, they're watching what's happening in the U.S. with the new Trump administration coming in.
Oh, for sure. That's a big factor.
So the Bank of Japan, they're trying to find that sweet spot, supporting economic growth, but also keeping inflation under control.
Tricky situation.
And that brings us to the U.S. and this whole hot topic of tariffs.
Yeah, that's been all over the news.
So many articles are buzzing about this, the Wall Street Journal, you name it. It's all about President-elect Trump's potential tariffs and what they'll do to the U.S. economy.
Right, right.
Some analysts are freaking out, worried about aggressive tariffs triggering inflation and just slamming the brakes on economic growth.
I've heard that too, yeah.
But then you've got other voices saying a more gradual approach, like easing into those tariffs, could actually be a good thing.
Oh, how so?
Their argument is it strengthens the U.S.'s negotiating position,
Yeah.
Without causing those huge price spikes for consumers.
Interesting. A more strategic approach.
It's a real tug-of-war, back and forth, lots of opinions.
Definitely.
Bloomberg even suggests the incoming administration might actually go for that slower, measured approach to raising tariffs.
That makes sense.
Could help soften the blow to prices, give businesses time to adjust.
Right, a more gradual transition.
But let's bring this back to, you and me, everyday people. How might these tariffs on goods from China, how might they hit our wallets?
Yeah, that's the real question, isn't it?
Because if tariffs do go up, even slowly, could mean higher prices for all sorts of stuff.
Like what kind of stuff?
Electronics, clothes, the things we buy all the time.
Makes sense.
And then, get this, those rising prices, they could actually feed back into inflation,
Oh, wow.
making everything even more expensive.
So it's a cycle.
It is. It's all connected. And while we're talking about things that hit our wallets, let's talk interest rates.
Okay, yeah, that's a big one.
Both the Federal Reserve here and the Bank of Japan, they're making a lot of noise about potential interest rate changes.
Right, right.
We already touched on the Bank of Japan, the possibility of them raising rates.
Yeah.
But here in the U.S., things are a little different.
Different how?
Well, we've got strong jobs data. So some analysts are actually scaling back their predictions for Fed rate cuts in 2025.
Interesting. So less of a cut than they thought. Yeah.
Exactly. To give you some numbers, the current forecast is for a 30 basis point easing, which means a slight reduction, but not a huge one.
Okay.
Meanwhile, the Bank of Japan, they've got a 57% chance of a rate hike next week, at least according to market predictions.
Wow. So they're much more likely to raise rates.
Seems like it. But here's the thing. Why should we, as people who don't necessarily follow every financial news blip, why should we care about interest rates?
Yeah, that's a good point.
It's because interest rates, they have this ripple effect throughout the entire economy.
They do.
They can influence, everything. Mortgage rates, which affect how much we pay for our homes, to the returns we get on our savings accounts.
That's a big deal.
If rates go up, borrowing money gets more expensive,
Right.
but you might earn a little more on your savings.
Right, right.
But if rates go down, borrowing becomes cheaper, but your savings might not grow as fast.
So it's a trade-off.
It's like a seesaw. you know?
Mm,
Borrowing costs on one side, savings growth on the other.
a good analogy.
Now, speaking of bold moves, let's talk about Bill Ackman, the billionaire investor,
Yeah.
and what he's doing with Howard Hughes Holdings.
Okay, what's he up to?
He's not just taking the company private, he's transforming it into this, like, vehicle for buying other businesses.
Wow, that's ambitious.
He's drawing comparisons to Warren Buffett's Berkshire Hathaway model, you know.
Oh, I see. Building a kind of empire.
What's interesting is the long-term vision.
In what way?
He's basically creating this diversified holding company, spreading his bets across industries, aiming for that steady, long-term growth.
Smart strategy.
And he's not messing around. MarketWatch quotes him saying he intends to hold the stock forever.
Wow, that's a serious commitment.
So people are wondering, could this become a trend? Will we see more activist investors, those big players, adopting similar strategies to build their own, empires?
That's a great question. Only time will tell, I guess.
Now, switching gears completely, let's talk quantum computing. It's been a bit of a roller coaster for investors, hasn't it?
It has. Those stocks saw incredible surges at the end of 2024, but lately, they've taken a tumble.
Yeah, it really highlights that whole balance between potential and reality.
How so?
The long-term potential of quantum computing, it's immense. It could revolutionize everything.
It really could.
But, and this is a big but, NVIDIA CEO Jensen Huang pointed out the practical applications. They're still years away.
Yeah, it's still early days.
It's a reminder that while the future might be super bright, the road to get there can be bumpy.
Definitely bumpy.
And speaking of bumps, Bloomberg highlighted a few companies that have seen their stock prices take a hit.
Which ones?
D-Wave Quantum, Quantum Computing Inc., and Rigetti Computing.
Oh, wow. So some big names in the quantum space.
Seems like some investors got a little ahead of themselves, caught up in the hype maybe.
Easy to do with such a groundbreaking technology.
The takeaway here is investing in emerging tech always carries risk.
Absolutely.
It's like surfing a giant wave.
I like that analogy.
You got to be aware of both the potential rewards and the wipeouts.
For sure.
The excitement around quantum computing, it's totally warranted, but you need a healthy dose of caution, that long-term perspective.
Don't just chase the hype.
Exactly. Do your research, understand the fundamentals, make informed decisions based on both the potential and the timeline.
Sound advice.
And we can't wrap up this segment without talking about another potential risk. Inflation.
Oh, yeah, that's a big one.
It's been rearing its head lately, and investors are definitely keeping an eye on it.
Why is inflation so concerning for investors?
Because it eats away at the purchasing power of your money. Same amount of money buys you less over time.
Right, it erodes your wealth.
So you want your investments to outpace inflation, otherwise you're basically losing money.
It's like running on a treadmill. You got to keep moving forward just to stay in place.
Exactly. It's all about staying ahead of the curve. So we've covered a lot in this first segment.
We have.
Asian markets, tariffs, interest rate changes, Bill Ackman, quantum computing, and of course, inflation.
It's a lot to digest.
The financial world, it's complex, always in flux.
That's for sure.
But by staying informed, thinking critically, taking that long-term perspective, you can navigate it all and make smart decisions to reach your financial goals.
Absolutely. Knowledge is power.
And that's what the deep dive is all about.
Couldn't have said it better myself. And that's what the deep dive is all about.
Couldn't have said it better myself.
Yeah.
So before the break, we were talking about like this whole complex financial world and all these moving pieces. Now let's zoom in a little. Okay. Let's talk about what it means for you, me, everyday people navigating this crazy financial landscape.
Okay, sounds good.
We talked about potential interest rate hikes, both here in the U.S. and over in Japan.
Right.
What could those rate hikes actually mean, practically in our daily lives?
Well, mortgages are a big one.
Oh, yeah, definitely.
If you're thinking of buying a house or refinancing, higher rates could mean you're paying more interest.
Which means,
Higher monthly payments, of course.
ouch.
And it's not just mortgages either. Think car loans, personal loans, even credit cards. If rates go up, pretty much any kind of loan gets more expensive.
Makes sense.
Yeah.
But what about like the opposite for people who are saving money?
Well, for savers, a rate hike can be good news.
How so?
Could see slightly better returns on savings accounts or CDs.
Okay, interesting. So it's important to pay attention to those rate changes and how they might affect our own wallets.
Absolutely.
Now, remember those tariffs we were talking about earlier?
The ones on goods from China.
Yep, that whole thing has sparked a lot of debate. But let's look beyond the headlines for a sec. Think about those ripple effects, those unintended consequences.
I'm listening.
So some industries, some companies, they rely heavily on imports from China.
Right.
Tariffs get implemented, they're suddenly facing higher costs.
So what happens then?
Those costs, they trickle down to us, the consumers. Higher prices on, well, everything.
I see. It's a chain reaction.
It is. So for investors, it's smart to think about, which companies might be more vulnerable to those potential tariffs.
Yeah, that makes sense.
Like, let's say you're invested in a company that, I don't know, makes electronics.
Okay.
And they get a lot of their parts from China.
Right.
You might want to dig a little deeper, see how they'd be affected if those tariffs hit.
It's all about connecting those dots.
It is, thinking critically about how global events could turn into investment opportunities or, risks.
Exactly.
Speaking of connecting dots and risks, MicroStrategy.
This software company.
That's the one.
Uh,
They've gone all in on Bitcoin. It's wild.
oh, yeah, I read about that.
MarketWatch says they've spent over $18 billion, and this is just in the last couple of months, buying up Bitcoin, even though the price has been all over the place.
So they're really taking a gamble.
A bold move, that's for sure. And it shows how crypto is becoming more accepted, in mainstream finance.
For sure. But it also raises some questions.
Like what?
Are they putting all their eggs in one basket? Is this a sustainable strategy in the long run?
Good questions. And MarketWatch also pointed out their stock has actually taken a hit recently.
Oh, interesting.
Makes you think some investors might be having second thoughts about this whole thing.
Makes sense.
It's a reminder that even with huge potential, there are always risks involved. Do your research.
Absolutely. Due diligence is key.
Now, let's talk autos. They've been facing some headwinds lately.
Yeah, I've seen that.
Bloomberg had this article about Volkswagen. Their deliveries dropped last year.
Really?
They're pointing to a few key factors for the decline. First, demand's down in China, and that's the biggest car market in the world.
All right.
Volkswagen's facing some serious competition from those local Chinese manufacturers.
Like who?
BYD, for one. They're grabbing market share.
Okay, so tough competition. What else?
And then they've got challenges here in the U.S.
What kind of challenges?
Well, President-elect Trump, he's threatened higher tariffs on imported cars, which could hurt their sales even more.
Oh, yeah, that would definitely impact them.
And to top it all off, they're dealing with, like everyone else, weak demand for electric vehicles.
It seems like a lot of automakers are struggling with that.
Yeah, both in Europe and the U.S., their EV sales have gone down.
So it's a perfect storm, almost.
Right. Pressure from every direction, competition, potential tariffs, changing consumer preferences. It's going to be fascinating to see how they adapt.
It will be.
Speaking of adapting, let's talk about something that shows how much influence crypto is gaining.
Okay, what's that?
Intesa Sanpaolo.
Italy's largest bank.
Yep, they just made their first ever spot Bitcoin purchase.
Wow, really? That's a big deal.
It is. It shows that even those traditional financial institutions, they're starting to embrace crypto.
So it's becoming more mainstream?
It seems like it. They bought around €1 million worth of Bitcoin, which, for a bank that size, it's not huge, but it's symbolic. Shows they're willing to explore crypto as an asset class.
Definitely a signal to the market.
And Bloomberg also mentioned BlackRock.
The world's largest asset manager.
Exactly. They've piled up over $51 billion in assets in their spot Bitcoin ETF.
So ETFs are like baskets of securities that you can trade on the stock market.
Right. Yeah, exactly. So in this case, their ETF tracks the price of Bitcoin, so investors can, get exposure to Bitcoin without actually having to buy and hold the actual cryptocurrency.
I see. So it makes it more accessible to a wider range of investors.
Yep, exactly.
Yeah.
So what does all this mean for the average person? Is crypto finally hitting the mainstream?
It's definitely moving in that direction.
Right.
As more big players like banks and asset managers get involved, it gives crypto more legitimacy. But it's still young, still volatile.
Good point.
So yeah, exciting to see it becoming more accepted, but caution is still key.
Don't get swept up in the hype.
Exactly. Do your research, understand those risks, then make those informed decisions.
Speaking of informed decisions, one of the most important things to consider is the psychology of the market,
Oh, absolutely. The mental game is huge in investing.
It often feels like the market is driven by fear and greed, wouldn't you say?
I'd agree with that.
Especially now, with all this uncertainty we've been talking about. Those emotions, they get amplified.
Oh yeah, it can run wild.
We see it all the time. Market's doing great, everyone's euphoric, getting greedy, taking on more risk than they should.
Right, and then
the market dips, fear takes over, people panic, they sell, even if it's not the smartest move.
it's a natural human reaction, but it can lead to bad decisions.
It really can. So how do we avoid getting caught up in that emotional roller coaster, especially when we're bombarded with headlines about, market crashes or the next hot investment?
It's tough, but it takes practice. And you have to be willing to step back and look at the bigger picture.
Okay, what else?
One helpful strategy is to focus on the fundamentals.
The fundamentals.
When you're evaluating a company, for example, look at their earnings, their management team, their position in the market. Don't get distracted by the daily noise.
So basically, do your homework, tune out the distractions.
Exactly. It's like tuning out static on a radio. Find the clear signal, the underlying fundamentals, and ignore the noise.
Easier said than done, I bet.
It takes effort, but it pays off. Remember, investing is a marathon, not a sprint.
Slow and steady.
Wins the race.
Now, with all the risks and uncertainty we've been talking about, there's also some good news out there.
Oh, tell me more.
Bloomberg highlighted this. The U.S. Small Business Optimism Index, it just hit its highest level since 2018.
Wow, that's impressive.
It seems like small businesses, they're feeling pretty good about the future.
That's interesting considering everything we've discussed.
Oh, it's like this contrast, Stock market's volatile, worries about tariffs and interest rates. But Main Street, they're feeling optimistic.
What's driving that optimism, do you think?
Well, the NFIB, a National Federation of Independent Businesses, they reported a big jump in their optimism index last month. And they attribute it to Trump's election.
Oh, so they're expecting some favorable policies from his administration.
Seems like it. They're hoping for tax cuts, less regulation.
It makes sense that they'd be hopeful.
It'll be interesting to see if it actually plays out,
Definitely.
If that optimism translates into more investment, more hiring, it could have a positive impact on the whole economy.
It could, but there's also a flip side, right?
Always.
If those pro-business policies don't actually happen, or if the global economy takes a downturn, that optimism could disappear pretty quickly.
It's a balancing act for sure.
Always is. And it shows how everything is connected. Main Street impacts Wall Street, and vice versa.
Exactly. Now, let's loop back to quantum computing.
Okay, yeah.
We talked about the risks and rewards for investors.
Right.
But let's zoom out even further. Think about the implications for, society as a whole.
Yeah, it's where it gets really interesting.
It's not just about making money. It's about disrupting industries, solving problems we thought were impossible, changing the way we live and work.
It's a total game changer.
Breakthroughs in medicine, materials science, AI. The possibilities are mind-blowing.
It's like stepping into the future.
And it's becoming more real every day. We're already seeing that disruption in the financial markets. Investors trying to figure out who the winners and losers will be in this quantum revolution.
It's a race to adapt.
But the impact, it goes way beyond Wall Street. How do we even prepare for this quantum future? It's exciting, but also a little intimidating, right?
It is. It's a lot to wrap your head around.
The best way to prepare is to be open to the unknown, be curious, challenge those old assumptions.
I like that. Be adaptable.
The world's changing faster than ever.
Yeah.
To navigate it, we have to be open to new ideas, new possibilities.
Well said.
Now, let's switch gears again. Remember that whole Bitcoin ETF thing we were discussing?
The one BlackRock is offering.
Yep. I was thinking, could that actually be a safer way for people to dip their toes into the crypto world?
Potentially, yeah.
Because, you don't have to actually manage your own crypto wallets and all that technical stuff.
Oh, it simplifies the process.
But, and this is a big but, you still have to understand the risks,
Oh, absolutely.
Like, the value of Bitcoin can fluctuate wildly, and that ETF will track those fluctuations.
So you could still lose money.
Exactly. And remember, this whole crypto world, it's still relatively unregulated.
Good point.
So do your research, understand what you're getting into before you jump in head first.
Always good advice.
Now, I want to shift gears completely. We've talked a lot about big picture stuff.
Global markets, trends, the whole shebang.
Right. But let's bring it down to earth for a minute. Let's talk personal finance.
Okay, what do you have in mind?
We talked about inflation earlier.
Yeah.
And how it eats away at your purchasing power.
Right. Your money buys less over time.
So what are some practical tips for, navigating that inflationary environment?
Well, one thing you can do is try to increase your income.
Okay.
Negotiate a raise, pick up a side hustle, look for ways to bring in more money.
Makes sense. What else?
Another important thing is to control your spending.
Easier said than done, right?
It can be, but it's crucial. Look for areas where you can cut back, create a budget, track your expenses.
So be mindful of where your money's going.
Exactly. And look for ways to save money on everyday expenses.
Like what?
Things like shopping around for better deals on insurance, using coupons, buying generic brands.
Those little things can add up.
They really can.
Any other tips?
Sure. Consider investing your money in assets that tend to do well during periods of inflation.
Like what kind of assets?
Things like real estate, commodities, certain types of stocks.
Okay, that's something to look into.
Guess that.
Now, let's talk about something a little more fun. Remember that story about Bill Ackman and his, Berkshire Hathaway-style move with Howard Hughes Holdings?
Oh, yeah, that was an interesting one.
I was wondering, what lessons can, everyday investors learn from that?
Well, one big takeaway is the importance of diversification.
Diversification.
Don't put all your eggs in one basket. Spread your investments across different asset classes, different industries, different geographic regions.
Right, so if one investment goes sour, it doesn't wipe out your entire portfolio.
Exactly.
What else can we learn from Ackmans?
Well, another lesson is to have a long-term perspective.
Long-term thinking.
Investing isn't about getting rich quick. It's about building wealth steadily over time.
So don't get discouraged by short-term market fluctuations.
Exactly.
Okay, last cover on this topic.
Shoot.
Do you think this whole activist investor thing, using companies to acquire other businesses, do you think that will become more common?
It's hard to say for sure, but I wouldn't be surprised.
Why not?
Because it's a strategy that can be very profitable, especially for those with deep pockets and a long-term vision.
So we might see more Ackmans in the future.
Maybe so. It'll be interesting to watch.
It will. Now, remember at the beginning of this episode, we talked about the Hang Seng and the CSI 300 being up.
Yeah, those Asian markets were performing well.
I'm curious, what factors are driving that growth? And how could it potentially impact the U.S. economy?
Well, in China, a lot of the optimism is around their economic recovery.
They seem to be bouncing back pretty quickly.
They are. Plus, the government there has been very supportive, implementing policies to stimulate growth.
So that's boosting investor confidence.
Exactly. And as for the potential impact on the U.S., a strong Chinese economy is generally good news for the global economy.
How so?
Well, China is a major consumer of goods and services, so their growth can create demand for U.S. exports.
Oh, that makes sense.
But it's not all rosy.
What do you mean?
A strong China can also lead to increased competition for U.S. companies.
Right, they're a global powerhouse.
They are, so it's a complex relationship.
It always is. Now, I want to circle back to something we touched on earlier. Interest rates.
Sure.
We talked about the possibility of the Fed raising rates here in the U.S.,
Right.
but there's also a lot of debate about whether they should cut rates instead.
Yeah, there are different schools of thought on that.
So what are the arguments for and against cutting rates?
Well, those who support rate cuts argue that it would stimulate the economy.
How so?
Lower rates make it cheaper for businesses to borrow money and invest, which can lead to job growth and economic expansion.
Makes sense.
But those who oppose rate cuts worry about inflation.
Right, we talked about how inflation can erode the value of your money.
Exactly. And they argue that cutting rates could actually make inflation worse.
So it's a tough decision for the Fed.
It is. They have to weigh the potential benefits of stimulating the economy against the risks of fueling inflation.
And speaking of tough decisions, let's talk about something else that's been in the news lately. The debt ceiling.
Oh boy, that's always a contentious topic.
It is. Basically, the debt ceiling is the limit on how much money the U.S. government can borrow.
Right.
And Congress has to vote to raise the debt ceiling periodically, or the government risks defaulting on its debts.
Which would be a disaster.
A total disaster. It could trigger a global financial crisis.
No doubt about it.
So why is the debt ceiling such a big deal right now?
Well, we're approaching the debt ceiling limit, and there's a lot of political gridlock in Washington.
Typical.
Republicans and Democrats are at odds over whether to raise the debt ceiling without any conditions attached.
So what happens if they don't reach an agreement?
Well, the government could be forced to shut down or, even worse, default on its debts.
And that would have ripple effects throughout the entire economy.
Absolutely. It could lead to higher interest rates, a stock market crash, job losses. It would be a mess.
So this is something to keep a close eye on.
Definitely. The outcome of these debt ceiling negotiations could have a major impact on the financial markets and the economy as a whole.
Now, before we wrap up this segment, I want to bring it back to the individual investor.
Okay.
With all this uncertainty swirling around, what are some smart moves that everyday people can make to protect their wealth and maybe even capitalize on some of these trends we've been discussing?
That's a great question. Well, one important thing is to have a solid financial plan.
A roadmap for your money.
Exactly. Figure out your goals, your risk tolerance, your time horizon. Then, create a diversified portfolio that aligns with those factors.
So don't put all your eggs in one basket. Spread your risk.
Exactly. And another key thing is to stay informed.
Stay up to date on what's happening in the markets.
Right. Read financial news, listen to podcasts like this one, talk to a financial advisor.
Knowledge is power.
Absolutely. And finally, don't panic.
Easier said than done sometimes.
I know, but it's important. The market goes up, the market goes down. Don't let those short-term fluctuations derail your long-term plan.
Stay calm. Stick to your strategy.
Exactly.
Well, this has been an incredibly insightful deep dive.
It has. We've covered a lot of ground.
We have. From Asian markets to tariffs, from interest rates to quantum computing, from the psychology of the market to the debt ceiling.
And everything in between.
The financial world is a complex and ever-changing landscape.
It is.
But by staying informed, thinking critically, and having a long-term perspective, you can navigate it successfully.
Couldn't agree more.
Now, we're going to take a quick break, but when we come back, we'll wrap things up with some final thoughts on the state of the global financial markets. Don't go anywhere.
All right, welcome back. I feel like we've really explored a lot in this deep dive.
We have, yeah.
Global markets, tariffs, interest rates, you name it. Even, like, the whole quantum computing thing.
True.
It's a lot to take in.
It is, but I think the main takeaway here is, the financial world is constantly changing.
Always moving.
It's complex, so many factors affecting it.
Right.
But, if you stay informed, think critically, have that long-term perspective.
You can navigate it.
Exactly.
And hopefully, position yourself for success.
That's the goal.
And that's what we're trying to do here on the deep dive, right?
Absolutely.
Give you the info, the insights you need to make those smart decisions about your finances, your future.
Empowering people, that's what it's all about.
As we wrap up, I want to leave you with one last thought. We talked a lot about the potential of quantum computing.
We did. But what if we zoom out even further? Think about the implications, not just for investors, but for society, for everyone.
Yeah, it gets pretty profound when you think about it that way.
It's not just about faster computers, right?
No, not at all.
It's about potentially disrupting entire industries, solving problems that seemed impossible before. It could fundamentally change how we live, how we work.
Absolutely. It's a game changer.
We're talking potential breakthroughs in medicine, materials science, AI. It's mind-blowing.
It is. It's like science fiction becoming reality.
And it's already starting to happen. We see it in the financial markets, investors trying to figure out who the winners will be in this quantum revolution.
That's just the beginning, though.
Right. The implications go way beyond Wall Street.
For sure.
It makes you ask, how do we even prepare for this quantum future?
It's a big question.
Feels like we're standing on the edge of something huge, both exciting and a little bit scary.
I think that's a good way to put it. Exciting and daunting at the same time.
The best way to prepare, I think, is to be open to the unknown, be curious, challenge those old assumptions.
I like that. Embrace the change.
Because the world is changing faster than ever. And to navigate it, we have to be open to those new ideas, new possibilities.
Well said.
We're living in a time of incredible technological advancement, and the pace of change is only going to accelerate.
No doubt about it.
The financial world is at the forefront of this, and staying ahead of the curve is crucial.
It is.
So as we wrap up this deep dive into the world of global financial markets, we encourage you to keep exploring, keep learning, keep asking those questions.
Curiosity is key.
The more you understand about how this all works, the better equipped you'll be to make smart decisions, achieve your financial goals.
Absolutely.
And remember, we're here to help guide you along the way.
Always happy to share our insights.
We'll be back tomorrow morning with brand new headlines from the major financial magazines.
Looking forward to it.
Thanks for joining us on the Deep Dive. See you all next time.